All right. Good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time on this Thursday, December 22nd, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so today we're seeing a little bit of a drawdown in the S&P 500, about 1.3%, which is interesting. We saw a lot of the hedges roll off for December OPEC into January, March, and December of 2023. We're still quite a bit away for the next monthly OPEC, so we could see a little bit of a volatility chop. As we as institutions either build more hedges or take hedges off. And again, I think a lot of this is going to be dependent on the dollar and interest rates. This common theme. Yesterday, I went over my plans with you guys. I do want to short this again around above 4,000. Once we get above delta neutral, 4,000 seems to be the place where we see a lot of options activity. We saw that back in December OPEX. We're going to see that probably in the next monthly options expirations going forward. So once we get over delta neutral, which is around that 4,000 zone, let's say it overshoots it by 1% or so. So I'm looking at around that 40-50, that 4,050 zone to go short on the S&P 500. What would make it an even higher conviction trade once we get there is if our liquidity signals all turn down. And right now, our liquidity signals are just, at least our junk bonds advanced decline line. It's quite stable at the moment. Don't really know what to make of it. It did dip down just a little bit for the last, let's say, 4 sessions before yesterday. But then, it rose up again. And even the declines, they weren't all that much. So we'll see. I'd like to see this really come down. If this comes down and the S&P 500 goes up to 40-50, that would make this a very high conviction trade. If by the time we get to 40-50, we see that the junk bonds ADL line is still going up, then no, I'm going to wait for some sort of a signal, okay? So that's my plan for the S&P 500. I went over it a little bit yesterday, but I think there was some confusion. I got some DMs from you guys, and it sounded like you all think that I'm going to do it for sure. No, I want that 40-50, and at the same time, I want the junk bonds ADL line to be going down. And if that's the case, boom, that's a high conviction short. And again, as always, I'm going to be buying those 1 to 3 month out debit vertical put spreads on either SPY. Also, too, if our growth to value chart is still pointed down, I may use the QQQ. But SPY has been pretty good. I mean, let's just keep it simple. I think every time I try to overcomplicate things or every time I try to get clever, it usually backfires. So let's just keep it simple. Let's just keep it to SPY or QQQ. Okay. So yeah, I'm just going to be doing that. And again, the liquidity signals. The New York high-low line actually is flattening out. However, that doesn't really mean much because that's just one day. I do want to see this continuously. If you're bullish, that is, if you're bullish, you want to see this continuously curl upward, but we're just not seeing that. And already today, we're looking at it already opened up pretty minus today. More lows and highs starting off in the morning session. Usually, if that's the case and it doesn't get into the positive territory within the next hour or two, at least for this year, it's usually close negative. And so if it closes further negative, that means this line will further curve down. And again, there's no meaningful rally that can last if this line turns down. And that's been true ever since the late 60s. Okay, I've been looking at this line and tracking it from, you know, from the numbers back in the 60s till now. So we'll see what happens. Again, this curls down, the junk bonds ADL curls down, S&P 500 goes up. I short at 40.50. Okay. New York advanced decline line. Oh, what's going on here? I remember this is also curling down as well. I'm not sure why this is not showing me the cumulative. Ah, there we go. So yes, the cumulative line is still coming down. That means that more of the not many of the stocks, not as many stocks are participating in rallies, and so it shows that breadth is really low in the market. So we're seeing a lot of stocks in weakness, so you know we can expect like the equal weighted index to probably underperform. Usually when breadth is low like this, when participation in rallies is low, and we're seeing, you know, declines over advances in the New York Stock Exchange, generally this means that your small cap index is going to be weak. All right, so we saw relative strength in small caps earlier in the year, but now when this is pointed down, that relative strength goes away in small cap index. So for those of you that trade small caps, watch out. When this line is heading down, usually small cap stocks don't do as well. Okay. That's the S&P 500. Let's look at energy. I know a lot of you guys are talking about energy. A lot of you guys are trying to get into oil names and betting on natural gas. Let's start with oil. Crude oil right now, it is going up. Oh, it touched 80 and then bounced right back down from there. I noticed this. I thought I was going to show you a rally. I haven't checked this in a couple of hours. I guess it got smacked down. It did just a few hours ago. So, okay, so there we go. There is a big meeting coming up in the first week of January. I do expect a big move from there. Which way is it going to go? I don't know. You know, longer term. So, you know, guys, you have to be very careful. You know, if you guys are listening to my thesis, be very careful and pay attention to the time frame, okay? I did mention that it's very possible we see 60, 63. That doesn't mean I am bearish, all right? It just means it's possible that we see a pullback, and then from there we see a bigger rally come about afterwards. It's just my zone where I feel the reward to risk is in my favor to go long. That doesn't mean it has to go there. That just means it just makes my risk management easier. If I get in long at 60, 63 and it closes under 60 for like a day or two, I know I'm wrong. I can get out of my position at a very small loss and call it a day, okay? If I get long here, you know, how do I know I'm wrong? If it comes down $5 or $6, I mean, it could still curl back up afterwards, right? Your risk management is a lot easier at the edge of price structure. And that is why I choose that, you know, if I want to go long on the crude oil contract, I'll go long around 60 to 63. That doesn't mean it has to go there. That's just where I feel reward to risk is in my favor, so that if I'm wrong, I know immediately when I'm wrong, and then I can just get out at a small loss. Okay, so by no means doesn't it doesn't mean that I'm bearish in the long term. Now, I did mention that you know, we might see some selling pressure, especially if we see stockpiles of distillates increase, the supplies increase, and if that's the case, yeah, we could see a little bit of selling pressure into January, February. That's definitely possible, but I do think that at some point in 2023, possibly closer to spring and summer, we might see higher prices. You know, so the medium term, I'm quite bullish actually on crude oil, but in the short term, let's say for the next quarter or two, yeah, we might see a little bit lower prices. Okay, so just pay attention to that. Those little details. Those little details matter. Okay. And then, of course, I also have a short planned. If we get to this 120, 125 zone, I'm willing to take a short. And again, that's just the edge of price structure. I just think we might see a little bit of a pullback once we hit there. You know, and again, that's just a trade. That's a really short-term trade that I will do once we get there. Okay, it's just we know we're wrong if it just continuously closes above our levels. And so it just poses a very good reward to risk scenario. So long on 60.63, short at 120.125, edge of price structure. That is how I will trade the crude oil futures contracts directly. Now, at some point, if we do see a pullback, I've told you guys this before, CPG, this is a name that I really want to get into. It's a little bit speculative, but I'm willing to take the risk. It's a great risk to take, I think, in this environment. They're increasing their free cash flow, EPS, share buyback, dividends, all the good stuff. Okay, you can go back in the past episodes. I've gone over CPG many times before. I'm still waiting on an entry. I'd love to get in under $6. I mean, that would be a gift. We shall see if we get there or not. CPG also, not only do they produce crude oil, but they also produce natural gas. I think half of their revenue comes from natural gas, and natural gas right now is languishing around these lows here. Some people thought that because of this cold weather in the United States that natural gas was going to go way up. And again, yesterday I talked about information edge. Just because you saw it on a weather report or on the news that the weather is going to be bad, that's not an information edge. If you can see it, everybody already saw it, okay? And so, do you really think that knowing that this storm that everybody's reporting on is coming, do you really think that is an edge? Do you really not think you're the only person that knows about it? Of course, I'm sure a lot of professionals have already, known about this or been planning on this or anticipating this. So it's really hard to gain an edge with that type of public information. And so I think this is a great example for everybody that went long on oil around here, in the last few days. I think this is a very good example of what hype can do to mindset. Okay, and I get it. That storm is crazy. There's like a foot of snow, and people are talking about ice and black ice and travel cancellations and all this, and it sounds really great and all, but you got to watch out. Okay, so generally, if the public already knows about it, there's a very good chance it's already baked in. I hope that's a very good lesson, and I hope it was a relatively cheap lesson for some of you guys who went long on oil. Hey, don't feel bad. I almost did myself. If it wasn't for my alert not going off, I probably would have gone in myself. So don't feel bad. I almost fell for it myself. Okay, so that's natural gas. I also want to talk about, since we're on the commodities topic, first, let's talk about, Australian dollar. Right now, Australian dollar, I noticed it tried to bust over the make or break. Remember this line? This level has been very important to us ever since, August, September for our China trade. Also, too, this was a trade that we took. I took an Australian dollar long at these levels back in July. So we definitely, this is definitely a very important zone. It tried to bust over it, okay, in overnight session, and it lost it, okay? And I think for the week, if it loses this, we could see further correction in the Australian dollar. And again, that 640, that is that number. If we retrace back to 0.640, and that is the new low on the weekly chart, and it curls up and makes that higher low there at the lowest, it can't close under it, but if it can at least close above it, it can be 650, 660, but most importantly, the 640 zone. As long as it stays over that and makes a higher low, I think that it would be a very good opportunity to get long on some Chinese stocks. Now, as I've told you guys before, Australian dollar is a very good forward indicator for China. Just because whenever China increases industrial output, they need raw materials. They get most of their raw material imports from Australia, and so they need to exchange their currency, buy Australian dollars in order to buy all those natural resources. So we usually see the Australian dollar make a low before, and we see the trend reversals happening within the Australian dollar before it happens in Chinese stocks. But again, ZTO, I've been talking about this since before Thanksgiving. You know, you can go back into previous episodes of Market Memo and look for those links. We are planning on getting into this. I was trying to get into this under 20. I said that around here when it was around, 21, 22. I said, oh, on the next dip we buy. It never dipped, and it just kind of ran away from us. I am wanting to get in on this on the next dip. If Australian dollar can maintain that 0.640 and make that higher low, definitely want to get into ZTO. Okay, this is the FedEx of China. With the China reopening, I think this is going to be a very good play. For the China reopening trade. As you know, Australian dollar is also a very good forward indicator for also the metal miners. Let's take a look at some of these. Gold is down today. Let's see here on the daily. Yes, it's down today. I think dollar is up, and so it's putting a little bit of pressure on the gold and silver. The gold and silver trade. And again, our trade is we want to get in the miners. I really want to get into the junior silver miners. Let's see, how much are they down by? Oops. Junior silver miners down 1.74%. And then we got the silver miners down 1.3. GDX down 1.75. So they're starting to come back down. I am waiting for that level. If we're judging this on gold, I have my alert set at 1740 or so. And I think if gold touches there, that might be a good place for gold to rally from. And again, a lot of that is going to also be dependent on the dollar. As a hedge for my quad U shares, I have some UUP calls. I still have them. All right. Just in case. All right. I'm always open with you guys. I always show you everything. So here it is. I'm still in it. All right. And I'd like to see, and what is it? I was on some Twitter spaces yesterday, and there were some individuals, saying that the dollar can't go up. It's making a top. I mean, yeah, this could be the top. Okay. Definitely could be. But that doesn't mean, currencies don't move in straight lines, okay? So even if we do fall from the top, we're not just going to go straight down, okay? It's going to be like, and again, we still have that phenomena where there's still a lot of emerging market debt out there that where a service payment is due in 2023. So on its way down, we're going to see pockets of demand where possibly some of these emerging market central banks come in and buy bits of it as it comes down. It could still keep coming down, but we might see little relief rallies happen here and there along the way, even if it does come down. So just be mindful of that currencies tend to make these really long moves. And instead of looking at a daily chart, I really recommend you guys look at more the weekly and the monthly charts when it comes to currencies. That's the real realm of currency traders. When they look at charts, they're looking at the, more than the daily chart, they're looking at the weeklies and monthly charts. Okay. And so on the weekly chart, I mean, definitely it looks like this could be an area where we see a little bit of a temporary relief. And again, I don't think we're going to make new highs this season. If anything, if we see new highs in the dollar over the highs of 2022, we're probably going to see that towards the end of 2023 or 2024. And I've gone over this multiple times. I do think that a lot of these emerging markets will have, that's when they'll start having these cracks in solvency. All right. These things take time. It's not something that that just happens overnight, okay? These things takes months, even years, okay, to manifest. And so I think for the season, yeah, this is the high. But once we get into like the second half of 2023, that's when the dollar could pick up again. So, again, time frame, those little nuances matter. But I think for the short term, at least for the next, let's say, couple of quarters, I do think we might see a little bit of bounce. I don't think it's going to get over 110. Okay, I think it's going to make a lower high. It's going to make a lower high before it comes back down some more. And once it comes back down some more, it could come back to this level right here, into the 97, 98s, form a base, and then we could see another uptrend for the end of 2023 or into 2024. I'm not trying to predict the future. I'm just anticipating what could happen. And so, of course, if the data changes, we're going to change our outlook. But right now, that's just what I see as a probable outcome amongst many probable outcomes. Everything, there's no crystal ball to this. Everything is within a spectrum of probabilities. And so just like any good chess player, no chess player can really 100% predict what their opponent is going to do, but they still think about 4 or 5 moves ahead. All right. We call ourselves checkmate trading for a reason. All right. So that's the dollar. Speaking of currencies, actually, there was some news that came out, or data dumps that came out from the UK. Their GDP numbers came out, and I guess it really disappointed. I guess it was, I wasn't really able to dig deep into the numbers, but apparently it was much worse GDP contraction than expected. And after that news came out, we saw the British pound sell off, and I've told you guys for a couple of months now that the British pound, the euro, and the Japanese yen are going to be forward risk on, risk off indicators for us. So even if you guys don't trade currencies, even if you guys only trade the S&P 500 or stocks or even crypto, I think you guys really need to pay attention to some of these things that we're talking about here. So, for example, the British pound, the euro, the Japanese yen, and the 5-year treasury. You got to look at these because I think, if we see more and more people selling their British pound and getting into the dollar, we see more people selling their euro, selling their Japanese yen, buying the dollar, that could really suck some of the money out of these risk assets. And I think this is a forward indicator for risk assets, but the forward indicator of the forward indicator, I think, is the 5-year treasury. Okay, the 5-year treasury note. And I think if the price of the bond, when bond prices come down, the yield goes up. And I think if the short-term treasury yields keep going up, we might see this dash for cash episode again, just like what we saw in the summertime. We might see that again. So keep an eye on this. If this starts really curling down on the weekly chart, let's say, we came to these levels. These levels we draw. I didn't change these levels, guys. These levels are the same levels that I drew back in June. Remember back in June when we drew this? Look at that. Look at how it comes there. It chops around here. It really needs to get over, close above, and resume its uptrend. Or we could see, again, another dash for cash happening where people just stash it away. No more Tina. There is an alternative as the dollar has an uptrend, and if the dollar resumes its uptrend, and if there's a 4.5-5% yield on dollar denominated accounts, a lot of these foreign investors may just end up stashing their money there, which creates the likelihood of more volatility, downward volatility in risk assets. So this is what I'm looking at. I'm looking at the ZF, the British pound, the euro, and the Japanese yen. Okay. Speaking of which, let's just take a look at all of them. The euro, all of them are down today. Euro, not so much. And then of course, the Japanese yen. It's interesting. The Goldman Sachs told everybody to go long on the US dollar and short the Japanese yen, literally right here. And then now, I think yesterday, Goldman Sachs came out and said to short the dollar and buy yen here. So I know this is a flipped chart. For Americans, I know this is kind of difficult to understand because usually when we talk about currency pairs, usually the U.S. dollar is on the in the second half of the quote, but for some reason for the Japanese yen, they always like to they like to flip it. I have no idea why. I have no idea why. In the futures market, they don't do it like this, but in currency forex they do. I don't know. So Goldman Sachs told everybody to short the yen here and get long here. All right. Most likely it's because they got clients that probably like some type of cross-border banking clients that need liquidity and need order flow to get out of their positions. You know, usually these large institutions, it takes weeks for them to get in and out of positions. So probably something like that. There's probably some institutions that are trying to dump this right here. That's my guess. That's my guess. Why would Goldman Sachs tell everybody to short at the bottom and go long after it's rallied like this? It's not because they're trying to help the public. It's probably because they have a client who needs liquidity. All right, it's probably because of that. That's how investment banks work. The investment banks are not your friends. They don't work for you. They work for their clients. The clients that pay the best fees. That's who they work for. So always remember that. But it makes me kind of suspicious that we might see a big dump happening after, all the major, maybe whoever needs liquidity after they dump, we might see then, this maybe come back down. We'll see what happens. We'll see. But I thought I'd share that with you guys. Those are the forward-looking indicators I'm looking at for risk on, risk off. And again, ZF, 5-year treasuries, that is something to watch. Okay, do we see that dash for cash again? Possible. If this comes back down, we might see that dash for cash again. All right, which would be good because we got those UUP calls. Again, I'm just using that as a hedge for my quad U that I have. Speaking of which, let's just take a look at that quad U. We're still around the $6 mark. Not much of a change. We did see a little bit of a rally yesterday. Looks like we're in the start of an inside day. We shall see. We'll see what happens. All right. Crypto. I know a lot of you guys trade crypto. And again, the open interest on Ethereum is super low. I mean, it's still staying at 4.9 billion. And again, until it gets around 6.5, 7 billion, it's a big nothing burger to me. I'm just shocked at how well these levels worked. These were experimental. In my definition, they were experimental. For some people, I don't think. Most people actually make decisions based on lines, and they do a lot less homework on them than I do. For me, in order for me to trust a quote-unquote line, it takes a lot of evidence for me to trust that. But I guess these work. I guess this is what perhaps maybe a lot of the larger players have the same lines we do. Maybe it could be. I don't know. But I'll use something. I'll use something that works until it stops working. All right. That's the name of the game usually for trading. Okay. Use it till it stops working. We'll see. I still remain patient. I will remain patient on this trade. I'm still looking for this. I really think this is the value zone, okay? This is the value zone on the ETH gold chart. This is it. There's just so much big movements in the dollar. It's really hard to price Ethereum and anything in dollar terms because the dollar moves so much. Actually, I'm curious, what does Ethereum in euro look like? Ethereum in euro. Oh, Ethereum in euro looks more like the Ethereum gold chart. Interesting. Okay. So yeah, I'm just waiting on this level right here. Okay. 0.58 to 0.59 on the ETH gold chart. That would imply, with current gold prices, that implies around anywhere from like the high 900s to low 1000s. Okay, depending on the price of gold. Bitcoin, same thing. For those of you who want to express your crypto longs or shorts via Bitcoin, Bitcoin Gold also has a very compelling level as well, although it is a little bit further away for Bitcoin for it to drop there. It's not a bad zone. I mean, that's also a very compelling zone to get long Bitcoin. However, for me, I will be saving my longs for Ethereum. Okay, I will be participating more in Ethereum. I have those HUT shares, which have exposure to Bitcoin. So I don't necessarily want some more Bitcoin exposure. And even my ETH exposure, I'm going to be keeping it pretty small because most of it, I already have it with those miners. So, that will be my total Bitcoin exposure. My Bitcoin exposure will be less than total, probably less, way under 10% of my speculative account. And my speculative account is only a fraction of my long-term account. So I'm keeping my crypto exposure relatively light. I think that, I'm just keeping it just in case if we see a rally. And I do think actually tech rally, we may see something like that in February. All right. Again, not trying to predict the future, just anticipating 5 or 6 moves ahead. I do think that temporarily, though, in the short term, we're probably going to see a little bit of volatility, especially if we see those risk-on currencies, again, the ones we talked about before, the British pound, the euro, the Japanese yen. If we see them fall and the dollar go up, at least in the short term, we could see a little bit of volatility. And again, I don't think the dollar is going to make a new high anytime soon. I just think it's going to be a little bit of a retracement of the fall that we've had for the last month or two. I think we're just going to see a little bit of a retracement. So, again, don't get it twisted. Okay. Don't put words in my mouth, but, I do think at least, just from the last couple of months drop, we might see just a little retracement. I don't think we're going to go back to the highs or make new highs this season. Although next year, end of next year, like end of 2023, 2024, I think that might be possible. Okay? That might be possible. Anything else you guys want to look at? I see a question here. The question is, do you always anchor your trend lines on the candle body? I anchor my trend lines usually on closing prices. I like closing prices. The only reason I would not use a closing price is if, like, for example, let's see, is there a chart that has this? I think maybe my ETH chart. Give me 1 second here. My ETH chart. My ETH chart. No. I don't think so. I don't think I did it. Did I do it on a? No. Yeah. So usually it's a close. Now, what is it? Where I don't know if there is one where I used a wick before. Only reason why I would use a wick, like let's say, for example, if there's like a huge order, like for example, let's say there's a huge drawdown like on a Monday or Tuesday, and then at the bottom of that drawdown there's like a huge influx of like orders, like huge block orders coming in, and it pushes price up so that by the end of the week we're like way up there. Okay, like it creates this huge candle wick on the weekly chart. In an instance like that, I may use that transaction zone where all those transactions came in. So it really depends on the transactions at the time. But I generally like to use closing prices. The reason why is because the closing price is generally where the institutions make their big decisions. They always do it at the end of day. Now, with crypto, the end of day is really different based on the exchange. Okay, so in crypto, I may be more inclined to use somewhere within the wick, just because that's where all the transactions came in. But if you actually look at like the equities, and stuff that's traded on an actual like stock exchange with an opening and closing time, you generally see most of the transactions happening around the closing prices. So for stocks and for equities and indices, I use the closing prices. And again, unless there's like a huge transaction zone that's within the bottom of a wick or something like that, that would be the only reason why I would use a wick. And also because of crypto, because the closing time is different based on every exchange, your transaction zone may not happen at quote unquote end of day, because end of day is different based on the exchange. Okay, and so for crypto, it's gonna be less so that I use the closing price, because closing price is always different. But definitely for stocks and for indices, I'm using closing prices, because that's where everybody shows their hand. It's like that moment in poker where everybody needs to show their hand. It's like that's the end of day. So I hope that answers your question. Anything else you guys want to look at? Let's see here. Somebody from chat is asking about XOP. Oh, my XOP? Yeah, we got out of XOP. We got out of XOP already. That's the oil producers. We got out of that already with a 20% gain. Actually, you know what? I don't like to go back and look at my old trades and see, what would we have done if we had kept it. It creates a really bad mindset. But you know what? Since you ask, we might as well. Let's do this. I know it's bad for the mind. I know. Is this the one I had? Yeah, 131, 121 is the one I had. 284. I got it at 302. So I guess, good. So it wasn't wasteful. Good. I don't want to look at that anymore. Okay. It creates a very bad mindset to go back to an old trade like that. Unless it's something you're trading actively or something, you're getting in and out and monitoring it like that. But that's not how I trade. So usually when I look back on a trade and get the shoulda, woulda, couldas, that's usually leads to a lot of bad mistakes. So I don't like doing that. But yeah, XLP, we got it out of the trade. I still think it's very possible we see year-end tax selling, especially if the 10-year goes up. If the price of the collateral, if this keeps going up, let's say next week, we could see it intensify. As the price of the collateral comes down, you may see institutions need to lighten up. And if they need to sell some of their winners, they're going to offset it with some of their losers. So you might see a pair trades happening. And we talked about this a couple weeks ago, where the biggest winners and the biggest losers were selling off at the same time. And definitely XLP is in that winner category. So we might see them taking some profits on this, and then also selling a weaker industry, something that didn't do well, like semis. That's what I noticed. That's what prompted me to enter this trade to begin with. I noticed that a lot of the XOP names, a lot of the components in XOP were being sold off in large blocks at the same time as semi stocks were. And so that's what prompted me to have this year-end tax selling thesis. It could still keep coming down. I mean, oil is up and this is coming down. We could still see that happening. I just got out of the trade because I didn't want to worry about this over the holidays. So we shall see. I think next week, guys, next week we have a 3-day weekend coming up. Monday for our friends overseas, Monday is a federal holiday. Christmas is on Sunday, but it will be an observed federal holiday on Monday. So banks and markets will be closed on Monday for you guys that trade from overseas. So keep that in mind. Whether or not you have any religious affiliation or not, whether you celebrate Christmas religiously or just as a cultural holiday. I do hope that you guys have a wonderful Christmas weekend. Enjoy your 3-day weekends, guys. Next week, I'll be back Tuesday, Wednesday, Thursday. Same thing, 30 minutes after the opening bell, the New York Stock Exchange. And we will have our regular scheduled program then, okay? But enjoy yourselves. Have a great time with family and friends. And for those who don't celebrate, just remember Monday's a holiday for us. And we'll wrap up our session for today. Our Discord invitation link is in the description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, trade safe. Again, Merry Christmas, and I'll see you guys next week.